For this Forex scalping strategy, we will need the Bollinger Band indicator. Go inside the indicator section, type in Bollinger Bands, and I usually use the third one over here. Click one time and close this screen. Now, in addition to the Bollinger Bands, I like using the 50 moving average as well. However, this is my personal preference, so I'm going to show you the strategy with and without the 50 moving average. So to quickly explain what the Bollinger Band indicator actually does and what all these lines mean. So the top level line is usually an area of resistance. The bottom area usually acts as a support zone, and the middle orange line over here is the 20 simple moving average. Now, trading the Bollinger Bands on the 5-minute time frame is very powerful, and here's an example why. So we currently are seeing a bearish engulfing candlestick, which usually means a good entry candlestick to enter the market for a short trade. However, we are seeing a supported zone over here, so very likely we should be expecting the market to push back up before it continues to go down. So we really don't want to enter on this area zone. Since we are scalping, our short position would be quite big, right? Even if we had the 1-to-1 risk to reward ratio, 10 pip stop loss, 10 pip take profit, it probably would pull back towards the upside before continuing to go down. This would cause us to lose the trade because of the pullback. So let's see what actually happens. So we did get the trade moving towards the downside, but as you can see, if we just zoom in, the trade would have not reached our take profit low, which would have definitely sucked and then turned around and stopped us out in the market. That is why it's super important to not rush when scalping. Find an accurate entry first and only then place a trade, and you will definitely make quick profits like myself in my videos. Now, it's easier said than done, so we really want to focus our attention what happens next. This is what I like to see. A first initial move towards the downside has been respected with the Bollinger Band supported area line. It pulls back towards the middle line, which is the simple moving average of 20, and it starts to consolidate on the 5-minute time frame area resistance and support. And we can also spot two of these candlesticks over here. This is the first one, this is the second one, are both bearish engulfing candlesticks. This suggests further bearish movement, and since the candlesticks are moving near the middle, it's a much better trading opportunity for us to go short. We can also see that the trend line is developing over here, a nice trend towards the downside. The 20 moving average is also covering our candlestick roof, which is probably not going to break. So over here, very likely could be a good trade towards the downside. Now, if we open a short position, let's say from this candlestick over here. So we currently have 10 stop loss, 10 take profit, right? What I would do is open a trade now from this position. If I'm a little bit late and I see another candlestick developing, because we always want to enter when the candlestick is closed, so it closes over here. And if we wait and see maybe bullish movement coming in, I might just enter a little bit higher for a better risk to reward ratio and a little bit safer stop loss level. As you can see, the wicks over here have been bouncing off the 20 moving average. So it does tell me that I should really keep my stop loss just above the 20 moving average and all these recent wicks. Probably the candlesticks will never reach above this area zone. I will never get stopped out and we can go towards the downside. So now let's see what happens. It goes towards the downside nicely, and this is where we close off our position. So 1-to-1 risk to reward, we entered the trade over here, or maybe somewhere around here if the candlestick starts pushing up for a better risk to reward, as I said, and we would go towards the downside for a profitable 10 pip trade, which is amazing. Now, in some cases, I like to be a little bit more aggressive with my trading. Let me show you. As you can see, these two candlesticks were doing nothing. It kind of consolidated. We had this strong bearish pressure from these two candlesticks, and the other two, although they are bullish candlesticks, it does suggest that very likely the market is not getting enough buying pressure. We also getting a bearish engulfing candle once again. We would open yet another trade. If we would open another trade over here, you already know what would happen. It goes down yet again. So although we are trading 1-to-1 risk to reward every single time, it makes logical sense to double down on a good trading setup. If you analyze slowly and patiently and find the perfect trading setup, you can double down, as you can see, over here, here, here. Maybe you could have placed 3 trades over here. This would have been 30 pips profit. And if you open in with a 1 lot size trade, it would have been a nice $300 profit within a very short period of time. If you have a small account balance, maybe you trade in 0.10 lot size, it could have been an easy $30 profit. So doubling down or tripling down even on this Forex scalping strategy with Bollinger Bands really helps and works. Now let's have a look at what happens with the market next. It goes towards the downside yet again. Now don't make this newbie mistake and start placing trades somewhere over here. Yes, it's a bearish engulfing candle and you are seeing the market dropping, and even if we have a look over here, it did drop and you could have made quite a bit of money. Probably 8 times out of 10, this scenario over here will probably bounce, and this is where you would get stopped out. So don't do it, be patient. Even this candlestick over here, I wouldn't really place this trade. It's still quite far away of the moving average. You always want it to be over here or really nearby for the most perfect entry and then go towards the downside in this case. Now if we have a look further, we can see this nice bearish engulfing candle over here, but it does cross this area zone. And look at this, it's a very big bearish move, but look what happens next. It starts bouncing towards the upside, and this is the problem, right? If we placed a trade short position over here, it would have sucked unless we would have placed a very big stop loss level over here, then maybe we wouldn't get stopped out. But really, when you're scalping, you want to have minimal stop loss and take profit levels. So let's say 5 pips to 10 pips maximum. So now again, if we are trading still the same pair, let's say Euro USD the same day, we want to drag this along. We can see this nice downtrend again. We are spotting yet another opportunity. Now, where actually is it? Well, this candlestick over here, the bearish engulfing candlestick, of course, bouncing off the 20 simple moving average Bollinger Band line, which is ideally perfect trade because we had this strong push over here, which we discovered a nice area of support over here, right? Every time it kind of touches, it goes towards the upside. So we can actually make quite a few pips over here. So what I would do, as you can see, the wick is over here. So this is the lowest you want to go for your take profit low. Your stop loss yet again, just above the 20 moving average, and we can go short and see what happens. So it goes towards the downside nicely. We open yet another trade. We are making money very simply and easily. What I wouldn't recommend doing is opening yet another trade over here. It's too risky. Even though it goes down, and yes, I can see it, it would have been a profitable trade, I wouldn't open it over here because it was the area of sensitivity. This wick is telling us that there is an area of support. So very likely this could have been, another push exhaustion scenario, maybe pullback, maybe even a break of 20 simple moving average. I could have been going towards the upside, which would have sucked and you would have lost money. So I wouldn't go with this scenario. I really would stick just in the middle over here, simple moving average. We're trending towards the downside. It would have been a nice and profitable trade to take. Now, if we have a look over here, we can see this trend still going down and we had this strong push towards the upside, right? So this is where you want to activate your 50 simple moving average. And as you can see, we have another line just over here. I just made a little bit thicker for you guys to see a little bit more clearer. And as you can see, we are currently on a downtrend, as I shown you, and we are currently trending towards the upside. Maybe placing it like this is a little bit more logical. And as you can see, we are currently suffering again with the squeeze pattern. We are squeezing away, although the market is not bouncing directly from the 50 moving average. We are squeezing away and the market is getting squeezed in between the 50 moving average over here, the 20 moving average over here, and the deviation top Bollinger Band line, which acts as a resistance zone as previously mentioned. So if we get the 50 moving average bounce or the deviation bounce over here and get a cross of the 20 simple moving average from the Bollinger Bands, this could be a good trade towards the downside. So let's see what happens. It goes down nicely. So as you can see, the candlesticks followed along, kind of squeezed over here. And after a squeeze, I always tell you guys, it either pushes towards the upside or the downside. We are seeing at the moment a nice trade towards the downside, bearish engulfing candlestick. We could place over here a short position. Now placing it over here is okay because we just crossed this area of uptrend, right? Every time it touched this area zone, it kind of went towards the upside. And in this case, it broke it. After a break, probably an exhaustion happens. So we are seeing an exhaustion. So maybe if I'm feeling aggressive, I would have entered over here, and that's totally okay. However, I know that exhaustion follows along. So maybe if I saw a bullish candlestick over here forming, I would have waited a few moments, 5 to 10 minutes or so, and waited for a better trading opportunity, because I know my entry candle is over here. So I know if it carries on moving up, we can just basically enter on a better entry position and still have this strong entry candlestick over here. So that's what I would probably do. However, let's go back to this previous scenario, the most simplest one, the breakout. We could have just add, stop loss around 10 pips again and take profit around 10 pips again. So a strong area of resistance over here. Look at this wick over here. It's nowhere near the stop loss. The deviation is over here, the 50 moving average here, 20 moving average here. A lot of ceilings to be crossed for the candlesticks. So very likely, even if they go towards the upside, they're gonna get some resistance around this area zone and shoot towards the downside. So let's see what actually happens. So boom, it shoots towards the downside nicely. Again, we had a nice bearish engulfing candlestick. This is where I probably could have doubled down once more, because if I saw this nice bounce of 25 and 50 moving averages in this case, look at this. The 25 and 50 moving averages are literally crossing each other and moving together. This is a stronger area of resistance over here. So very likely if we get a bearish engulfing candle, as we did, it's probably going to go down. And this would have been a great Forex scalping trade with the Bollinger Band trading strategy.